A very good evening to all of you all who have come in, and welcome to the second webinar of ETF Pathshaala by ETF Junction. I'm Koel Ghosh, Head of Strategic Investment Initiatives at ETF Junction. And a quick intro for ETF Junction today is that ETF Junction is India's first ETF platform, and it's a fintech platform which intends to provide complete ecosystem for the ETF industry involving the manufacturers, ETF service providers like stockbrokers, investors, advisors, and influencers. This is a solution that is attempting to address the underlying challenge and the lack of infrastructure and awareness about exchange traded funds, that's the full form of ETFs, and create a platform for smooth and inclusive growth of ETFs in India. ETF Pathshaala is a forum for which ETF Junction has created to build awareness and to share knowledge on ETFs. Today's discussion aims at demystifying exchange traded funds. So we're going to be running through some really basics and backgrounds on exchange traded funds. And we do want our audience to be very participative and I'll start with introducing all our esteemed panelists who will give some insights on the subject. And we want everyone who's there to use the chat option and ask us questions because we really want this to be a very participative, interaction, and we don't want it a one-way conversation. So let's start with our eminent panel. I will start with Siddharth Srivastava. He's head of ETF products at Mirae Asset Investment Managers in India. He has more than 13 years of experience and he looks after passive investment products at Mirae Asset India. Prior to joining Mirae Asset, he was associated with National Stock Exchange and Morgan Stanley Capital International, that's MSCI. Now, next we have Suresh Sadagopan. He is the MD and Principal Officer of Ladder7 Wealth Planners Private Limited. It's a fee-based financial planning and advisory firm, a respected and a good, well-known name in the financial advisory space. He started this practice way back in 2004. In February 2023, Suresh was awarded as one of the top 101 top most influential BFSI leaders at the World BFSI Congress Awards held in Mumbai. Uh, an author, among other accomplishments, he has written a book titled If God Was Your Financial Planner, which covers personal finance as well as financial planning concepts for investors. Finally, we have Saket Kumar, which is co-founder ETF Junction with over 25 years of exemplary experience in mutual fund industry. He is a seasoned professional with a proven track record of building successful organizations from the ground. Prior to ETF Junction, Saket was the founder of Raste Commuting Services, a prominent player in transportation across India. At the BID Convention Awards in Paris 2019, he was awarded the only company in car rental service in India for best in quality services. His previous experiences include Bharti AXA, Investment Managers, and Kothari AMC. And now, without further ado, let's start our discussion. As more and more awareness on the need for investing and financial planning is surfacing, I think the need to understand the space is also growing. There are numerous options, right from your traditional bank-oriented ones to more innovative ones. As we work for money, it's important we make money work for us too, right? Now, there are numerous options that offer market exposure, be it direct equity, mutual funds, or exchange traded funds. ETFs, as our topic of discussion today is. Now, the global markets have crossed over $10.86 trillion dollars, and it has over 11,000 odd products. The variety of options are shifting from a very straightforward, simple market return oriented solutions to more innovative options that bring more variance to your portfolio and also have a shift in risk reward proportions. So, given this global context, my first question is to you, Siddharth. So how have ETFs evolved globally and what is driving that popularity over the years? And does that have any opportunities for investors in India? Over to you, Siddharth.
Thank you, Koel, for that introduction. And I'll begin at the very start. So, the index investing started via launch of first index funds in 1976. It was launched by Vanguard, and as we all know, John Bogle was preeminent figure in talking about uh, benefits of index investing. Fast forward in 1990, the first ETF was launched in Canada. Uh, Contrary to what people believe, that first ETF was launched in US, it was Canada where first ETF was launched in 1990, and then in 1993, I think the most well-known ETF globally, which is S&P 500 ETF by State Street, also known as Spider, was launched in, I think, July or August 1993. Subsequently, over the year, I think the entire euphoria which happened in tech stock in during dot-com um, rise up in 1996, 1997 also aided to the popularity of ETFs. And I think that is when ETFs started getting thrust at that point. And now ETFs have evolved significantly. It's not just about core products like S&P 500, MSCI World, Nifty 50 or Sensex in India. People do use ETF for core allocation as well as satellite allocation. They use ETF for long-term strategic investment as well as very short-term tactical investment. They use for investment team and market cap based funds and sectors, themes, strategies, inverse and leverage. So it has evolved quite significantly. Now, I think we can break this down, the entire evolution of ETF in two main phases, right? One was when people started to realize that it is becoming very difficult for fund managers to consistently generate alpha wherever markets have become efficient in terms of information flow. And this started first in US and Europe, and that is where you saw uh, funds like S&P 500, Nasdaq 100, etc., gaining popularity because people are thinking, why should I pay a fund manager 1 or 2% when I'm seeing that they are finding it increasingly difficult to even outperform the benchmark. Why not buy a product like ETF? It simply tracks the or replicates the benchmark return, right? Because while it is important to know that there are still 10, 20, 30% of active funds which outperform the benchmark, especially in the large cap category, etc. There's also a concern of consistency, right? Today, a large cap X is outperforming. Tomorrow, it can be a large cap Y, and next it can be a large cap Z. How do you capture the performance of tomorrow, right? So that's how the gradual shift started. And it started predominantly in market cap based categories. And first, it started in large cap space where people, because of a shrinkage of alpha, because of low cost of these uh, ETFs, started warming up towards passive fund. They started believing that beta is nothing to be shy about. In chase of alpha, you may not get beta also. So why not allocate some money in passive funds? And then the second phase, when people became more and more familiar with the advantage of index investing, they started innovating. They started finding out different types of product innovation to have a more method driven approach towards certain strategies and certain themes. For example, I can define a quality in a particular way. For example, return on equity, debt leverage ratio, etc. So why not simply make it a rule-based index and launch an ETF on it, and investors can get access to just quality companies, or similarly to a low vol company, or similarly to a high dividend company. Similarly, right now what we are seeing is that if I want to simply target electric vehicles manufacturer, you'll hardly find any fund manager who has that expertise in lithium and battery space, in EV space. So why not create a rule-based index which you picks these companies, and I'll take that exposure to theme. I don't want to outperform that theme. I want to take exposure to that theme. So that's the second phase where people started uh, looking at more innovative products which provide exposure to sectors, themes, strategies, more innovative themes, etc. And that is when in phase two, ETFs started becoming part of people's satellite portfolio as a part of their tactical allocation. The first phase was driven by core allocation investments in S&P 500, Nasdaqs of the world. And the second phase is more so in smart betas, themes, etc. And I think the popularity of ETF has grown because you're seeing more and more product innovations happening. You have very simple products which is suited to a lot of audience, and it can be part of your core portfolio. And then you have products which probably might be suitable to me, or product X might be suitable to you, Koel. And you have a lot of options to choose from. And I think that simplicity, low cost, transparency, a method driven approach is what has made not only index funds but ETF also now very popular.
Thanks, Siddharth. I think what I take from is it's a simple tool, right? Makes it very simple to follow a rule-based index. I think that's something when somebody is looking at market and exposure to markets, why not find the most simplistic solution rather than going to something which is very complicated and requires a lot of research. Now, coming to you, Suresh, given that you are, in the registered investment advisor space and you're an advisor, I always push to whenever I'm speaking and people ask me for advice, I say, I'm not an advisor, but you must go to somebody who's professionally doing this and you're professionally doing this. So for someone who's completely new to investing, now, given that Siddharth has really set the stage in terms of what ETFs mean, the different kinds of ETFs, how to manage your portfolio, core satellite. There's so much that one has to keep in mind when we are sitting down and planning our investments, right? How would you simply explain ETF in very ABC language? And what do you believe are the most misnomers, or myths about ETFs that Indian investors today believe and are kind of restricting themselves from getting exposure to this investment vehicle? Over to you, Suresh.
Yeah, so I mean, I'm going to talk about Indian investors. I'm going to talk about what we do and what are the myths and misconceptions and what are the challenges we are facing as far as ETF is concerned. I would congratulate you people, Saket and Koel, on launching this ETF junction. So I mean, there are multiple problems in the ETF space today. In fact, a long time back, maybe 3 years back, we tried, as far as the ETF is concerned, we wanted to invest in ETFs. I think I have talked to you earlier also on this. See, there are some liquidity challenges. I mean, when I want a certain amount of investment to be done beyond a certain level, there is a liquidity and the price kind of shoots up. So there is an impact cost on that, and I'm not very sure whether I'll be able to sell a chunk of ETFs at some future point in time. So that is one of the challenges which currently it was there at one point in time. So I think the ETF space is evolving, and I think probably you are well positioned to take advantage of that particular situation. So let us break down what is an ETF. So as far as the ETF is concerned, I mean it is largely a part of the passive investing space, but I concur with Siddharth. ETF is no longer just about passive investment. There are active ETFs also. There are very specific themes on which probably you may not find any actual fund out there, but there may be an ETF out there which can probably be suitable for a particular investor looking at exposure to that theme. So ETF predominantly it came up for passive investments, like he was mentioning S&P 500 or Nasdaq 100 or Russell 1000 or any of those things. Anything where I do not want to really take active participation in the index. So active participation in the underlying, and I want only the index exposure, and I want that I'm okay with that kind of a return. Then index funds or passive investing is the way to go. But as far as the passive investing is concerned, ETFs are way cheaper as compared to as compared to an index fund, because most of the indices which are available today are wrappers around ETF. So there is another level of charges. At least I'm talking at least about India. So there is another level of charges in that. So in that sense, ETF is a much better product, which has the underlying of, I mean, when we are talking about the passive fund, whatever is the composition of the index, it will have the same composition as the index, and it will come at a very low cost. And this is very suitable for people who especially want to invest from the long term point of view. So from the long-term investing point of view, we want a core portfolio where we want to invest for several years. I think ETF actually performs that function wonderfully well. So ETFs is slightly misunderstood in the sense that people tend to think that liquidity is not there. I mean, which to some extent is true also, but it is not entirely true. Volatility, people tend to think that there is too much volatility as far as an ETF is concerned, which is not really true. I mean, just because throughout the day it is open for subscription, it does not mean that there is too much volatility as compared to the typical mutual fund. It is in fact the same level of volatility that you have. One of the actual challenges which we face when we are actually putting together a portfolio is that, see, there is not one platform from where we can actually do all these investments and reporting. So currently, the reporting platforms are all splintered, and I mean, for mutual funds we use something, for ETFs we use something, and things like that. So that is one of the problems which today we are facing as a advisor. But having said that, uh, ETFs are maturing in India also. Globally, ETFs have really gone places, and in fact, there are ETFs which are in trillions. I think Vanguard ETFs are in trillions now. I think 4 or 5 trillion now. One ETF itself. So that will probably happen in the future here also. And at that time, when the liquidity and other impact issues are sorted, we will definitely be looking very keenly on ETFs per se, not necessarily only the index and other passive funds. The other portion which I'll quickly dwell on is regarding the international investment. So international investment today, I mean, of course, I know the challenge today which we have in the mutual fund industry. There is a problem as far as the RBI limits are concerned. I'm not talking about that. That will get sorted at some future point in time. But I mean, there are so many thousands of ETFs out there internationally, and if we want to participate in, for example, AI and robotic space, currently, I mean, I'm completely hamstrung in terms of participation in that space. Or I mean, frontier biotech. I mean, if I want to participate, I cannot. Or if I want to participate in electric vehicles, probably I cannot. I mean, there are ETFs out there which actually operate in that space, and if those become available to us, that will be very useful for people like us to construct client portfolios around those things also, to the extent that we want to have international exposure. So that's broadly what I feel.
Sorry. Yes, I think there is a lot of, I concur with you in terms of the scope that, exchange traded funds today have in India. And I, if we see the growth, I think that just in the last 5 years, it has been more than 30% odd. And, we have around 74 odd products, more than, I think, 7 lakh crores of assets under management, which is almost 17% of the mutual fund industry. So obviously, this is a space that's thriving. But one of the biggest, I think, facts of India is that there has been a lot of knowledge and understanding of traditional mutual funds, and investors are very well aware of that. Coming to you, Saket, there obviously we just spoke about what the advantages of ETFs are, how it's getting so much of prominence. Suresh dwelled on, aspects of that. But what do you see as are the primary advantages that these ETFs have over traditional mutual funds? Because people are today investing in mutual funds. And so why do you think, when one has to take a decision, they will be inclined to pick up an ETF? Over to you, Saket.
Thanks, Well. Thank you for kind words, especially while introduction. Just to give you a brief, if you look little back, the way mobile has been able to penetrate the country, the moment data and camera was added to it, right, it made a huge difference. And as a product, just to give you a sense, some 60 crore people today have smartphones. The utility of the particular product has gone up dramatically. If you look at ETF, it's just an evolved version, right? As I think Suresh was sharing, it's an evolved version of stock and mutual funds. Obviously, it has got the best of the feature, what stock has to offer, and also what mutual fund has to offer. If you look at the strength the product has been able to have, clearly, this is a very strong on the liquidity. Maybe as Suresh was also sharing that, not all ETFs are as strong as far as the liquidity is concerned, but they are fairly good. And I'm talking about the global ones, where the liquidity is not a concern. So, you can trade on stock like individual stock, right? They offer greater liquidity. And at any point in time, one can buy and sell during the market hours. So that really has an edge as far as the traditional mutual funds are concerned, because they basically have one particular NAV, and that also at the end of the day, based on the net asset value. Secondly, obviously, the intraday trading, as many times as you want during the trading hours, one can trade. Mutual fund only can have at the end of the day, as I just shared. The second feature which you basically look at, which has a huge advantage over the existing products, is the cost it has. If you look at average mutual fund has a cost of 1.5 to 2.5%, here it is dramatically low. And ETF generally have lower expense ratios compared with 0.5 to 0.30. And that is where it adds up to the overall return which one looks forward to, which significantly impact overall returns, and especially when one has a long-term investment in mind. Third, if you look at the transparency, unlike other instruments, right, each ETF discloses their holding every day, which enable investors to exactly look at what assets are being owned. And just because of this particular feature, trust me, the regulators love this product across the globe, not only in India. If you see, they have been a huge anchoring as far as the ETF is concerned. And there's so much of concession, so much of, maybe regulatory advantages being extended to the product. So that really is something which stands out. If you look at, the nature of the product as such, because of its unique structure, it is more tax efficient. So that really helps. Coming to the other aspects, which has a huge advantage, is the flexibility. Now, if you look at the product, as also, I think Siddharth was sharing, maybe short-term speculators, maybe people who are looking for investing in short-term, right? For just trading, speculating, taking short position, investing for a long period of time, just a pure investment, maybe in individual investors, retail investors, you talk about, the bigger institutional investors, everyone is lapping it globally, even in domestic, market. If you see, the early trends are really, really abysmally high. As I think, Koel, you also shared that roughly we're talking about 6.7 or 7 lakh crore of AUM, being added up. If you look at just 10 years back, it was 50,000 crore. So that's where, the flexibility is something where it is really a big support as far as the appeal of the product goes. Next comes the lower investment, minimum investment. If you look at in most of the instrument, right? If it is a stock, then obviously the stock price, or in a mutual fund, there's an X amount. Here, at a 45 rupees, right, you can buy a nifty ETF, which gives you exposure to 15, 16 sectors, have access to 50 stock. What better can you look as far as, the access to this entire diversification goes. So that's something really comes very, very handy. And, even for, SIP, where the minimum amount is 500, here it could be as low as 45 rupees or 100 rupees. Right? There is no entry exit load here. It's unlike, other investment where the moment you enter 1 year, 1.5, whatever it is, right? There is a lock-in. Here it is not the case. So product clearly has a huge compatibility, right? For all segment of investors, I just shared short-term, long-term speculators, people who want to take short positions in the market. The success, of the product globally, if we can look at, right, has been the appeal it brings with it in terms of adaptability. Right. And that's why the adoption of the product has been pretty fast in a short span of 30 years. the kind of inroads it has made in the investors' portfolio, and all kinds of investors love the product because of its strong appeal and flexibility. Just to give you a sense that even one stock ETF called Tesla recently completed $1 billion in terms of size. So that clearly says that the way this product has been really getting inroads, and these are very early days for India. We believe the kind of strength it has, the kind of features it brings to the table for investors, it's just a matter of time it will get in the respective portfolio. Thank you, Kunal.
Thanks, Saket. And I completely concur on that positive scope or that ETFs have in India. I've been saying that for the past decade. I've been seeing the landscape transform completely. And today, the numbers that you see are, I mean, nobody would have thought the numbers a decade back, right? So it is the reason we are, I think, all having these conversations today, because more and more people want to know about it. But coming to you, Siddharth, one of the things is, I think, investors have so many options today that it's very, very easy to get confused, right? So one of the things which is very important for investors is making a decision, right? They have so many options. You spoke about the different options within ETFs. They have different options within equity, debt. There are different asset classes, different geographies. Now, when it comes to ETFs in particular, how would you advise, investors on the decision-making process, and basically how easy or difficult is the process? If you can explain it, as a fund from the fund management perspective, I would probably take that through with Suresh and Saket as well.
Yeah, I think that's a great question, and I think probably Suresh is will add more because that's his domain. But I think see, ETF ultimately is an investment vehicle, right? So the underlying uh, way to pick a right investment vehicle is not different. First of all, you should know your goals and your investment objective. Like how you pick mutual fund for investment, whether you want to invest in large cap fund, mostly from a long-term point of view, or you want to invest some bit of your allocation in small cap fund just to get that kicker, just to get that alpha, and allocate less money there. Same fundas, all those fundas of creating a robust portfolio also applies to ETF. Like people should know that just because it is in ETF, while it removes the fund manager risk, it does not remove the market risk. It continues to behave in a way market behaves, and that is closely linked to what index is tracking and how index is constructed. So it is very important to know what you're pursuing, what your goals are, what is your investment objective, and then to ensure that ETFs which you are picking aligns to those investment objectives. Right? It is very essential. So, for example, I'll maybe take a minute or two. For example, if someone is very new, has a lower risk appetite, or someone who is looking to take passive exposure in large cap category, etc., or even a mid cap category, can start looking at Nifty 50, Sensex, Nifty 100, mid cap 150, ETF, etc., and start using these building blocks in their core portfolio. They can add gold ETFs, right? Very popular investment vehicle. They can add silver ETF, etc. And that is where they can think to create their core portfolio. Again, I'm not saying that go only the passive way, do passive plus active, right? And then you can create a portfolio. Then if you are aware about risk pertaining to a lot of these satellite investments like sectoral investments, or if you're very bullish about certain themes like manufacturing, or if you're bullish about BFSI sector, if you're bullish about electric vehicles, etc., you can add those components in your satellite portfolio, take smaller exposure, always be aware about your risk profile, and then again, you can add international, etc. So you have to approach investment in ETF in a very disciplined manner, and we all A lot of investors have built that discipline over a period of time by investing in active mutual fund, and same sort of discipline is required here, right? You need to be aware about your risk appetite, your investment objective, and then that is the beauty of ETF. You have plethora of option if you are aware about your risk appetite. I'll just take an example. In large cap category, in active side, you typically have only large cap fund, right? One AMC, one large cap fund, and you have those large cap fund investing in at least 80% in top 100 stocks. That is the regulation. But look at ETFs right now. You can invest in top 50 via Nifty 50. You can invest in top 30 via Sensex. You can invest in Next 50, which is the bottom 50 stocks of large cap segment via Next 50. Now, that does not exist on the active side as an option. If you are very risk sorts of averse, you can pick up Nifty 100 low vol 30, which invest in 30 least volatile stocks. If you are very risk taking investor, you can invest in Momentum 30, which invest in stocks which are generating alpha, which are on the run. And if you are very quality conscious, you can invest in Quality 30, right? Within that, you can pick up top 10 banking stocks in banking ETF or top 10 IT stocks in IT ETF. And that is the kind of uh, flexibility which ETF provides. But it is, again, essential to know what is your investment objective and risk and your risk appetite. Lastly, what I'll say is that more options create not problems, but a question also. Which one is the best? So first of all, always understand the method of the index uh, on which the ETF is based on. We have seen similar type of product constructed, but they have very different exposure. Just look at similar sounding products, but they might have different portfolio construction techniques. So understand the method, then look at if you're choosing an ETF, what sort of expense ratio it has, lower the better. What sort of tracking difference it has, lower the better. What sort of tracking error it has, lower the better. What sort of liquidity and AUM it has, higher the better. So, and that will help you pick the right ETF after identifying what sort of product you want to go for. You want to go for core or satellite. You are looking for large cap, mid cap, theme, sectoral, etc. Options are many, and if you use it in an intelligent and informed manner, the ETF is a very powerful tool in investing.
Yeah, thanks. Thanks, Siddharth. Suresh, coming to you because you do have, your clients who are investing and allocating. What do you see as the main driver for people who are selecting ETFs, and how do you probably drive any of the dialogue towards investors whom you want to introduce ETFs to? If I can understand what is the level of interest, and are investors using ETFs to achieve financial goals, and is that advice being given at all? If you can, share some light on that.
So Koil, it is not the investor who is going to tell us what to invest, where to invest. So as financial advisors, we will have to look at what are the goals. I mean, what kind of financial architecture that we want to create for clients, and accordingly, we'll have to say what kind of portfolio we want to put together. Active, how much? Passive, how much? Long-term, real core portfolio, how much of that? So all that we will have to figure out. And I mean, I think we are all talking about the same thing. ETFs are very low cost, and from a long-term investment point of view, and if it is a passive underlying index which it is tracking, it is also taking out the fund manager risk. So for the large part, if you were to look at a long-term investment without the fund manager risk, I think a ETF on Nifty 50 or 100 or even Nifty 500, these kind of basic ETFs are absolutely a no-brainer. And S&P SPIVA report, where you come from. So that very clearly indicates that at least in the large cap space, most of the funds are unable to beat the index. So that is very very clear. Across time frames, it has not been able to beat the index. So there is a very very clear case for passive investment, and I mean ETF is one of the passive investment choice. I mean I again hasten to add that there are other components in ETF which are not exactly passive. So I will put that in the satellite portfolio, like Siddharth was sharing. So suppose I'm very kicked about, let us say, electric vehicle or something like that. I can probably choose an ETF. So currently, that kind of, product variety is currently not there in India. But again, if we are having those options available, and if we decide, we and the investor decide that that is what we want to do, sectoral or any thematic ETF is what we want to do, then we have that choice, which probably may not be available within the mutual fund space itself. So ETF gives us actually much more choice. So acceptability of ETFs, that is the question that you asked me. I mean, acceptability as far as passives are concerned, I mean, we are completely sold on passives, and we are going to go by market data. So as of now, we are really operating predominantly in the large cap space. Large cap space, we believe in passives. In the mid cap and small cap, I think currently the data is not really very 100% clear that passives are all the time outperforming actives. So I think there is some juice as far as the fund managers are concerned for them to actually show that outperformance. But as and when the outperformance shows, like it has actually shown in US and other jurisdictions, I think we'll definitely move to passive. So ultimately, I look at everything from a financial architecture point of view, from the client point of view. I'm not really running only after returns. I want to be able to meet the client goals at the time that they want. I want them to have a comfortable retirement. I want to be able to meet their goals on time. So that is my lookout. And if a passive product is going to do at a lower risk, I would prefer an passive product as compared to a typical active product. I hasten to add here that I'm not probably going to go only for passive, unless of course the data is going to really be very persuasive on that front. But it will be a mix of active, passive, all those kinds of things in core and satellite, and that's how we'll construct the portfolio. Portfolio can vary, of course, from client to client according to the requirements.
Thanks. Yeah, and I agree, Suresh. I think that's a very, very good point. Using the investor should not be telling where to invest. I think that's what happens through a lot of times. You investors come and say, okay, I want to invest in equity because I want to make my 100 rupees to 400 rupees. And they completely miss the fact that there is a whole financial goal, risk, reward, the entire planning of your life, which part of your life stage you're in. And I think that's the beauty of registered investment advisors and the value that these professional services bring in. And I have always also, along with being an advocate of the passive space, being an advocate that you do need to take these professional help to ensure that it's not only kind of build your money and your wealth, but it's also at what stage of life you're in and how you are approaching that entire building out. I think, and that's the value, Suresh, the entire fraternity that you all are bringing to the table, and thank you for that. Moving to the next thing, I think, Saket, this kind of leads us to when investors are also taking advice, they also need to equip themselves with a lot of information. So, Saket, if you can tell us what are the kind of resources or tools that you would recommend on investors who also want to equip themselves with the knowledge of what is out there in the market. Like Suresh and Siddharth are talking about so many options, right? And I started this webinar saying that there are so many options. So how does one actually research for themselves so that at least they come across as informed and they can have an informed discussion with the financial planner and decide how they can, consider their portfolio?
Thank you, Kuel, for this wonderful question, I must say, because this is something very pertinent at this point in time, as India has largely seen products which are push product, right? This is something slightly different. Now, let me just take 2 minutes to give you some understanding how the India is evolving, especially on the digital infrastructure. I just shared some 60 crore smartphones right now, right? And the journey started just 10-15 years back, right? 10 crore Indians have already connected their bank with the Aadhaar. Now that's something which is very, very pertinent as this entire journey to the digitization is going up. As for the recent report, I think for the consumers on the Thompson, 58% of all consumer spending is online. 71% of search happens online, right? Let me just take you, Amazon, right? They just completed 10 years of their presence in India. I've got 10 crore customers. Flipkart obviously came much earlier. 20 crore customers they have in India, which are all subscribers. Zomato delivers close to 8 crore orders a month. Paytm does 9 crore transactions, right? Roughly around 9.3 crore users they have as of now, as per the recent report, right? Now this is just one part of India. Now look at the other part. SBI, roughly 100-year plus bank, has got 25,000 branches, around 60,000 ATMs, right? Subs almost 42 crore customers. This is where the big differentiation that their YONO users are roughly 5.5 crore in number. So India, and if you look at this, just one part. Second, if you can share with you, India has got the largest active users of YouTube in the country. And the numbers are quite mind-boggling. 57 crore users, right? Number one. Number two is USA, with almost less than half, 24.7, or roughly around 25 crore user. And it is very surprising to see that roughly 2 crore YouTube channels are operational, right? With almost 41,000 having a subscriber base of 1 lakh plus. This is just the way things are changing in India. And this is what is a breeding ground for investors who are looking forward to the understanding of any kind of product, and especially ETF in specific in question. Now look at what all has happened, right? If we talk about mutual fund, I think Prime Minister Modi has been giving, on his election rally and speeches as of now, is that, mutual fund from last 10 year, 8 lakh crore to 40, almost 5 times, right? 42 lakh crore. If you just take 20 years, I've been an integral part of the industry since 1997 onwards. 20 years back, the industry was at 1.23 lakh crore, almost 36 times. That is where the huge growth is happening. And if you look at, in terms of the dichotomy, right, in terms of the women who have added and the new millennials who have added, I think it's mind-boggling. I'll not look at those data for the paucity of time. But just to share, what fintech is offering, right, as a maybe a value add to investor, what is happening that, fintechs are going to the investor rather than investors coming, right, for the transaction of the product. Fintechs are going back to the investor. That's very important. They are giving customized, maybe streamlined analysis of the investment process for investment, which has become very easy and convenient for investing. That's number two. Number three, basically, they're helping the data-driven insights, right, which an investor always looks forward to. And here, in absence of, any particular push or maybe getting access to the, insight which they are looking from there, making investor engage in terms of the different data points which they bring to the table. And, also harnessing the power of technology is immensely strong both for investors and for advisors. I think what Suresh was sharing clearly, brings up, very strongly. And what numbers we are seeing, I think going forward, maybe the industry is aiming at 1 lakh crore of AUM. It's just a matter of time what we can look at. With this entire effort, not more than, 3.8 or 4% of the Indian investor, to be exact, I think 3.8 lakh crore of investors which are there. I think going forward, I think digitization will really lay a huge ground for the investors to add up and participate in this journey. Now, when I look back, which are the resources? Clearly, if you look at in India, these are very, very early days, but obviously there are points where they can look forward to getting data, they're getting, research reports, or maybe get a favor of understanding about the different aspects. I think even Siddharth shared that, what are the total liquidity numbers, or maybe how has been the trading volume. These are very critical and important for investor to understand what is the tracking error, what has been the performance, right? What are the new things which are coming up? Clearly, stock exchange, which is NSE, has some details which it shares on everyday basis to investors who can go and have a look there. So that is something, which is there. Most of the ETF provider website has details about it, right? With brief on what is ETF and also, their respective products, how does it fare, what has been, INAPs, what has been the, just like net asset value, their value, which is available end of the day. So these things are available at least at respective mutual fund houses like ICICI, SDFC, Mirae. So one can, have a view, the performance analysis. Also, if you look at, there are areas in terms of regulatory understanding. SEBI gives you detail on their site, one can have access to. Maybe there are certain websites, right? Like ET, Economic Times, you can have live mint or maybe money control. There are a couple of details which is available there, right? So there are online brokerage platforms, right, which is there. If I talk about Zerodha or a couple of others, which is giving some brief and detail about it, where investor can take a very holistic understanding of the product and also can look forward to what are the things which are important for him to take a note of and can then decide on the investment. Besides that, if you look at, there are screeners available, maybe there are mobile apps, I just said, there are a lot of fintechs which has been making an effort on that side. So this just to give you a sense that these are early days, but still we can see green shoots of the details which are available. And I'm sure as we progress, more and more details would be available to investors thanks to the digitization efforts. The product as such is so versatile in nature, right? Can be really useful for all segment of investors.
Thanks, Saket. I think we just have enough time for just one, I think, round of closing remarks. And I think I'll start with you, Siddharth. I think we discussed the scope and the opportunity and the true potential have always been there. Now, my only question has been is why isn't this sector moving or this segment moving at the pace that we would want it to move? Global is 10.86 trillion and we are not, we are of course exponential growth. This is growth, but there's a low base effect that we are having here. But what do you think are the primary challenges from as an asset manager that you see that is causing this space to not move as fast as we would like it to move?
I think first point is obviously awareness about passive products, especially ETFs. At times, I feel that we make it very complicated for ordinary investors by talking about INAVs and spreads and etc. I think communication can be more simpler and we can make people more aware about how powerful the tool is, how powerful this investment vehicle is. We can obviously talk about that in chase of alpha, do not miss the beta, right? There, as Suresh said, that there are pockets where active funds are doing really well. And there are pockets where passive makes much more sense. Ultimately, any investor objective should be to create a portfolio which gives overall best returns with as low risk as possible, right? And I think when we talk about, as in when we make investor more aware that ETF is a wealth creation avenue, it generates uh, returns, and just not simply compare it with active funds. Just don't talk about cost only, and make it more complicated. I think as and when awareness increases, um, then then ETF uptick will increase. Secondly, obviously, people like Suresh and other RIAs, distributor, etc. Obviously, uh, eventually in US it picked up when people started going towards advisory, etc. And then the ETF picked up in US and in Australia, etc. And it started getting added into the investor portfolio. And thirdly, obviously, I think Suresh also mentioned that one challenge is obviously liquidity, right? I think there are a lot of ETFs which are fairly liquid. There are some ETFs which will eventually become liquid. It's more like a chicken and egg situation. When the customer will come, you'll start the having more fresh dishes being served out. I think it's the same when you are seeing more people with so many demat accounts opening up, zero cost broking uh, taking up the entire segment. We'll see more and more interest. I think liquidity will eventually improve. SEBI is taking very significant actions in improving the liquidity and improving the disclosures. I think all three, when they will come together, awareness, involvement of RIAs, distributors, advisors, etc. And thirdly, the improvement of liquidity on the exchange, and that is when the ETF will start growing more and more. But Koel, I think don't be that disappointed. We are seeing ETF market has significantly grown in last 4 or 5 years to almost $70 billion, almost for 5.7 lakh crores, if I'm not wrong. It's a very good place where we are at right now. I think the inflection point is uh, coming very soon rather than later.
Yeah, I will correct you. I think as of the last number that I saw, if I'm not mistaken, June, I think it was some 7.64 lakh crores. So I think definitely the number is growing. So I'm very excited about this space. Wouldn't be talking about it if I wasn't. But Suresh, I won't repeat the question, but there's always I have this need to understand what are the kind of investors that are more inclined towards ETFs. You're seeing a lot of investors. We don't get to see whom you get to see and how they approach you. But is there a genre of investors who are liking ETFs? Is it more a push strategy, a pull strategy? How does it work with you all?
As advisors, I mean, we are going to get a whole range of people, starting from somebody in their 20s to somebody in their 70s and even 80s. So, I mean, ETFs will be, or passive investments will be applicable to many of them, depending on their life situation, depending on their risk appetite. So, as far as we are concerned, we are virtually having passive investments in virtually all cases. So now, how much will it be in a youngster, and how much will it be in the case of a mature investor? It can vary, and it can vary depending on when the goals are coming, what is their life situation, and things like that. That can be, or is it
No,
a real long-term investment that we are putting together?
I
It'll depend
understand
on
that,
that.
Suresh. My point was that are you seeing the younger generation, kind of going more towards passives and ETFs, and you see the older generation being more conservative? Is that the trend? Because I'm hearing a lot of these DIY investors who are kind of do it themselves, and they are actually steering and gearing towards more of ETFs and passives. That's the idea I wanted to get from you.
Yeah, yeah. So what I'm hearing as far as the DIY investors, the younger lot, see the younger lot are very, very savvy. I mean, they are an internet generation, and they have access to information, and they are actually really using the information. I'm talking about many of them. Some of them are also going to day trading and things like that, which probably can be avoided. I mean, that is not what we are talking about now. But there are quite a few savvy people who understand what is passive investing. They are also very clear that okay, active investments are lagging at least in certain areas, and they want to really get into passives in a very serious way. And so those DIY investors are really coming to passives, and whatever numbers you are seeing, I think it is a whole lot of this younger generation, the very savvy younger generation, which has actually driven up the ETF. I would say a big part of that will be the very savvy younger generation. So now let me come to advisors like us. See, as far as advisors are like us are concerned, see, as far as passives are concerned, we are the first one who will be taking that as a part of our overall allocation into the portfolio. I mean, we are natural allies as far as any passives are concerned. So, I mean, a typical person who is getting a commission out of it, passives is not really an ideal product from their point of view. In our case, passives is the ideal product, and we do charge a fee for our advice. So, from our point of view, limiting the costs in the product which the customer is incurring is something that we naturally look at. So, from our point of view, to a lesser or greater extent, we have passives in almost all cases. Now, I'll tell you some of the niggling issues which we are facing with as far as our customers, where I mean, if those things are sorted out, I think the number of ETFs that we'll be suggesting will probably go up again significantly. See, one of the problems is, see, where we are actually putting together a mutual fund, say, transaction, like for example, MFU. I'm not able to do that for my investor in terms of ETF currently. So now a lot of times what happens is my client is having a ICICI Direct, or they are having something with HDFC Securities and things like that. And a lot of times we give an advice, and we are expecting them to put that through, maybe through their broker, maybe through their broking account and things like that. So there is a problem that we face at the transactional level. And after a particular point, they say, boss, I'm not able to do that. What do I do? Will you take over and things like that? And we are also faced with multifarious interfaces, and sometimes we do that for clients. Sometimes it gets done by themselves through somebody, their broker or things like that, coaxing, cajoling. We lose a lot of time. That is one. Second is the reporting platforms and things like that are not really fully integrated, fully they are not talking to each other. And so we have a splintered say portfolio reporting that we are currently contending with. So that is also one of the challenges as an advisor that we are facing. While the product is good, these are the actual practical challenges sometimes we are facing. So, I mean, this needs to be sorted, and I'm sure many fintech providers are working on this. And the moment this particular thing is sorted, I think again you will have a major tailwind as far as passives and ETFs are concerned.
Absolutely. Food for thought for Saket, and we've completely run out of time. So, Saket, I I unfortunately can't ask you for closing remarks, but if you want to have a final quick summary in a quick 1 minute, I we can just do that quickly.
See, thank you, Koil. See, basically, if you look at the adoption takes time. If I can tell you globally how things have been, going up. Though, as Siddharth shared, 1993 is what the first, spider came, right? SPDR. It was 2010 when the subprime crisis came. The entire impetus got really added up. So, it's the adoption also, if you take globally, has taken 10, 12, 15 years. And we are seeing the same thing happening. We are on the very, very right track because I've been a part of the mutual fund industry. When I joined the industry, mutual fund was roughly around 60, 70,000 crore. Look at the way it has grown up in 20, 25 years. It's amazing. And adopting from fixed deposit to mutual fund was a Herculean job. Now, from at least fair bit of understanding of mutual fund is there. So adoption from mutual fund to ETF is going to be even faster. And when it comes up, look at what has happened recently with Mexico, Australia. It's been like a tsunami. So, just a matter of time. The product, as all of us agree, has a huge strength. And, if something which is really of good utility, clearly awareness is something which need to be added. Also, the way it has to get into the portfolio, people need to just understand the utility. Once these two things are taken care of, I'm sure it's a matter of time.
Thanks, Saket, for that really quick minute. I think you really met the time limit. I would like to thank Siddharth, Suresh, and Saket today. I think this was a very insightful, discussion. This is the second of a series of such discussions that we want to keep having. Siddharth mentioned about awareness. We want to create awareness in the market, and that's the reason we are having it. We will be showing the replay, and that is also going to be available to all, and that's the way we are kind of spreading the knowledge. So thank you again, Siddharth, Suresh, and Saket, for this wonderful insights on ETFs as we continue the journey here on. Thank you.
Thank you, Koel. Thank you so much.
Thank you, Koel.
Thank you, everyone.
Thanks. Bye, everyone.
Thank you, everyone.